It's Brian Preston, the money guy.
This is from Jamie. I'm curious to see what you think about this one because his eyes will get big and then I'll start answering and his eyes will get small again. Thoughts on the stock market recovery with the still high unemployment rates, etc. Okay, let me start on this one and let's see where we go with this. Unemployment could be high, unemployment could be low. It's a thing that changes seasonally with what's going on economically. Does that mean that you should adjust your portfolio based on that? Conversely, market went down really, really bad through the COVID crisis, and now markets come up really, really strong in the latter part or in the middle part of this year. Does that mean you should be adjusting your portfolio and changing your allocation? Our thought is probably not. When it comes to portfolio design and portfolio construction, you really want to design a portfolio that's going to weather both good times and bad times, up economies and down economies, high unemployment, low unemployment. And what really happens is as you move through time, you tweak that allocation so that you're generally becoming less aggressive over time, moving to more conservative over time, but it's tweaking. It's not like our answer to be, oh man, unemployment's still really high, a crash is coming, put everything in cash. We have found in our experience that folks who try to figure it out to that sort of granular level don't generally find themselves to be very successful investors over the long term. Rather, you should have a portfolio that if you had to lock it in a box and not look at it for 5 years, it would probably still be a pretty good portfolio for you 5 years from now.
I thought the question is interesting because, look, we're in unique times. 2020 is going to be studied for years to come. And the fact that, first of all, understand stock market is always a forward-looking indicator. Mm-hmm. It's usually, it's up to debate for how long it's forward-looking. So it's not looking at unemployment right now. And even unemployment is such a weird number right now because of the pandemic, in a lot of ways we are paying people to be unemployed. Sure. So it's kind of some distortions that we don't even know how this is all going to play out completely. Just telling you, that's why you have to be careful trying to read the tea leaves, is that because the market in the short term is just crazy.
It's frenetic.
I mean, it's one of those things because I've had so many things in my life telling me, people come to me and tell me between the computers trading, all these changes in life, they're always screwing up. But I'm always like, okay, boil this thing down to what is it basically in the long term. It's an indicator for your economy, the growth, the innovation, the technology. Because remember, this pizza pie is not a zero-sum game. Somebody doesn't have to lose over here for me to gain right here. If you go look at the market cap, meaning the value of our economy, if you compare it to now versus 1900, it's tremendously bigger. So that's why you can, if you need proof that the pizza pie is growing, look at what innovation and other things. And by the way, Daniel and I have had many discussions because we're working on some projects offline. It is speeding up. Mm-hmm. If you talk about Moore's Law and other things where you're talking about microprocessors, the doubling, there's also an innovation cycle that is speeding up. Mm-hmm. If you think about, we just did a show on all the companies that didn't even exist 10 years ago that we take for granted now. And so I would focus on that, then letting it. So that's why you got to get all the parts about what is the components, what's the why of your portfolio, because all the daily pricing in the market is that Warren Buffettism, where he talks about the crazy neighbor who's yelling out prices every day for what he would buy your farm for. And you have to tune it out, mm-hmm. But look, I'm not saying know the price earnings ratio. You need to, of the markets, you need to at least pay attention to basic components in there so that you are an educated investor, but don't let that stuff derail you from making the right decisions for your long-term self. That is having a plan of action, knowing your why is what's going to keep you on stable ground.
Love it.